In the next 3 years, Tesla will generate $100 billion in free cash flow, according to Gary Black, right here. And this is still before full self-driving really kicks in. Tesla's Wall Street 2023 EPS estimates continue to increase, which is 51% year to date. And watch this, as Tesla's price falls. That has caused Tesla's forward PE to drop to 35x, its lowest since the depths of COVID, when the global economy was shut down. And as Gary Black pointed out correctly here, that makes no sense. But I'm enjoying this as I'm buying more Tesla stock shares. I'm looking forward to hopefully picking up a few $100,000 more of Tesla stock shares before the end of the year. Gary did his own poll about multi-year buybacks, and results are interesting. 57% of the people that voted investors would be happy. I also like that Gary says that he would prefer that the new buyback would come from excess cash and that Tesla would preserve its debt capacity. I really prefer that over raising money and then buying back Tesla stock. I would probably change my mind in the future, but right now, with how everything is going with the economy, I would like to have some extra room in the bank accounts of Tesla to be filled with more cash. Gary just made this Twitter thread that is quite juicy. We're going to get into that in just a moment. I also like Gary's suggestion that the buyback would not be necessarily immediately buy $10 billion of Tesla stock. It would just be basically an announcement that would announce or commit to buying $10 billion of Tesla stock back over the next 3 years. And just perhaps it would make sense to put a limit at what price Tesla would not buy back more of the stock. And I would definitely like to see a buyback if stock keeps dropping down to 140, 120-ish level. I would really like to see that personally. I think that would make a lot of sense. I personally believe there are many other things that Tesla can still do to fund and spend money on. I'll make another video soon about that as well. And also, just temporarily, with everything going on in the world, it's good to have that extra cash, I believe. And I certainly agree with Gary here that Tesla stock investors should be buying all of the Tesla stock that they can, which is exactly what I'm doing. We're going to get into that juicy Twitter thread in just a moment, but first I want to show you this here. I know some Tesla stock retail investors are mad at Wall Street that they are evaluating Tesla stock based on deliveries and not production, but I do see where Wall Street is coming from, and I think for Wall Street, that is actually the right thing to do because they just have to be extra careful and they don't just follow one stock. Now, when I look at investors that are incredibly wealthy and entrepreneurs, billionaires, oftentimes how they make their wealth in the beginning is by concentrating their bets. You can look at most of them basically, and it's the same story over and over and over and over and over and over again, unless they inherited their empire like the Waltons. So then you concentrate your bets. You want to really see what everyone is missing. And I think for Tesla stock specifically, it does make sense to look at, for me as a retail Tesla stock investor. But if Wall Street does that with every single company, for example, they're going to make a mistake. And when they make that mistake, it's going to sting. And Wall Street just does not want to do that. But for me, and from perhaps many of you as well, definitely not financial advice, we think that we only want to look at production because Tesla will sell every single car it makes. If I think about full self-driving, and if that really comes to reality in the rather near future, Tesla can sell just Model 3s and Model Ys, millions of them per year, not just 1 or 2 million a year, many more. And the reason why Wall Street wants to look at deliveries is because that is what drives profit. But for me, having done my analysis of demand for Tesla vehicles, which, by the way, there's a video coming later today about that. There's another way I know Tesla has no demand issue at all. I don't see that specific reason talked about anywhere at all within the Tesla community. And that's partially because I'm from Canada and I see a few things over here in Canada that everyone is missing. I will share that with you later today. So let's get into this juicy thread now. Remember what Gary said? That makes no sense. How Tesla stock is so low. Gary says here that the latest culprits for Tesla stock being down is the concerns about Elon selling Tesla stock and then the Q4 of volumes in China for deliveries. But then he suggests to think it really through. None of this basically impacts long-term margin, EV adoption, or cash flow, of which Gary projects to be $100 billion of free cash flow in the next 3 years. That is preposterous, unprecedented, ridiculous. I was going to say insane, but it truly is. Gary expects the Fed to pivot in 2023, likely in the first quarter, once the recession is declared. Troy talked about the 8,000 yen discount, which is about $1,000, basically, if you really, really round it up. That discount was offered in China before Tesla missed the third quarter deliveries, and many argue that there's no issue because management hasn't told us. Here's where it gets interesting. Gary has learned a long time ago not to trust what management says in terms of management delivering bad news, and especially about pricing. And when he was a new analyst in 1992, well, that's a long time ago, he put a sell rating on Philip Morris. They basically sell cigarettes, because he thought that there's going to be a demand problem because they were stuffing everything in at the end of the quarter to make their numbers, basically, and then buying down inventories after quarter end. And Gary was convinced that this would not last for a very long time, so he put a negative report on it, and guess what? Prices had to come down. Every of our analysts had a buy rating on the stock, and of course management would publicly chastise Gary every month. However, then abruptly there was a price cut and the stock fell by 26% in one single day. Now that's a big thing. And then Gary put a buy rating and everyone else downgraded the stock. Of course, the company recovered quickly. The expectations reset. So what do I see here for Tesla? For Tesla, if they do cut prices, let's say, I don't see a big issue. That would probably create a stock dip in the moment. But I think it would quickly recover because there's no demand issue long term. I got a video coming later today about that. Tesla stock is Gary's largest position, and he mentioned that he generally holds a stock tight even when he sees short-term headwinds ahead. The EV adoption soaring in Europe and China, the US EV credit kicking in Q1, and at least one new factory and Cybertruck coming soon. Gary's price target remains unchanged at $550 per share for the next 6 to 12 months. There are a few responses from Troy as well, which we're going to go through right now. And there are, in a way, how I see it, actually good news. Which, when you first look at this, 4680 cell production has stopped. Tesla's working on new machinery to enable volume production. You would think this is bad news on the surface, but here's what I think. Here's why I think this is actually not bad. You see, the stock, the earnings are doing well. We'll see the next earnings report where they are going to be exactly. But overall, earnings are looking good. And that is without 4680s. So imagine when those go into volume production and that new technology is implemented, margins are going to further increase. So we already like the numbers as they are. And these numbers are without 4680s. And this would be just one small reason why I would not be a huge fan of an immediate buyback. I'm not against announcing a buyback, but I just wouldn't want Tesla to buy back the stock like right now, this moment, immediately, unless the stock falls down even further, because 4680s, where are they? They're not here. So if we just spend extra money, and I know if we spend a little bit more, it may not be the most efficient way to scale, but hey, look, you have to compare. If we overspend a little bit, and if we can get 4680s faster, wouldn't that still make sense? Also, that discount was for Tesla insurance, which we want all Tesla owners to have Tesla insurance, of course. And that, of course, provides an ability for Tesla to undercut all of the competition. I want to point out one flaw in Troy's methodology. And by the way, I'm a big fan of Troy's work. If you are a Tesla stock investor and you have time, a lot of time that is, you should read everything he puts out and then think. But here's one flaw, which is why I think a lot of people are just looking at the data and they are making conclusions that are going to be wrong because they don't know how the numbers were calculated. Troy pointed out that the deliveries are going, that the backlog has dropped in China, the wait time for new orders is too low, Tesla needs more orders. Now, I am definitely not against more orders. However, I want to point this out. Austin here has a very good point. How are actual wait times factored into this? Basically everything that Troy calculates. For example, many people that ordered Model Y many months ago have similar estimated times for delivery as those ordering recently. Multiple orders keep getting pushed further and further out, and I would know because the order that we placed for Model X, now more than a year ago, has been delayed, I don't know how many times. It feels like it's getting close to about 42 or 69 times, roughly in that range, approximately. So Troy replied that this is based on wait times on Tesla's order page. Now, when you think about that, if I was to calculate the demand, for example, for Model X or Model Y or any vehicle, we would have to assume that we can count on this model if every time you order the car, you get the car exactly on time then they said you're going to get it. But we know this rarely happens, or relatively rarely, or at least in the past. And Troy's reasoning for this, which I fully agree with, by the way, is that he wants to keep the model consistent. We need consistency in the calculation method, which I agree. But if we just think a little bit, which is important, and which this is where we as retail Tesla stock investors can have an advantage over someone who's looking at, 15 different stocks. Austin here continued, would that not imply higher backlog than what's being calculated here? Which is exactly the point that everyone is missing, especially Tesla stock bears. And I'm not even going to get further into this. I will make another video about that. And I'm not even going to get into how many people are potentially waiting to place their order for Tesla until January, which is when in the US you will get EV credits again. And no, this does not even include the reason that everyone is missing why Tesla has much more demand than everyone is seemingly thinking. That is still coming later today. And of course, Tesla cars, they're just iPads on wheels, right? I like to point out that the software actually works and that Tesla vehicles are never delayed basically because of software problems, unlike some of the competitors that do not know how to make iPads on wheels. Just something to think about. And another thing to think about, the 48 reasons why I only own Tesla stock in my stock portfolio. My name is Matt Posius. Thank you for watching, and watch out for that video later today about the reason that no one is talking about that I will cover later today in the next video for Tesla's demand. Thank you so much. I'll see you there.